Hi, Zach, how you doing? Well, this is the golden question that I get asked day to day. Tax efficiency. Well, it's something that it's a struggle to do in a few minutes, but we'll give it a go. It tends to focus around all aspects of the business and like looking at all expenses, all income, and the complete setup of the business. It's a case of being tax efficient for all of your taxes, and not necessarily just minimising, say, your corporation tax. This could potentially lead to higher income tax or a higher rate of national insurance. To that, and it's a bit of a delicate blend. Tax efficiency is basically the key phrase. Efficiency is good, tax avoidance is bad. So be aware of anyone or any company who offers you any ideas for how you can avoid paying tax. These tend to be non-revenue supported ideas and should generally be given a wide berth. What we tend to specialise in is looking at ways to streamline your total overall tax liability, whether this is your personal tax, capital gains tax, corporation tax, or any kind of tax, or an amalgamation of all of them. If you own your own limited company, we can look at the best ways of having you extract your money from the company to limit your personal tax, but also the corporate tax that you pay as well. So ways of doing this can be by means of having the right salary, bonus, dividend structure in place, when to take the pay, who gets to pay, who else in your company, stroke family, can benefit from a salary or a dividend payment by way of a company structure which has other members of your family having a percentage share of the company. All of this can be done to get ways to minimise the tax on extracting any worth from the company. There can also be ways of looking at expenditure, maximising allowances that you can claim through the company or through your personal liabilities to minimise the tax. All fairly client-specific types of analysis. You can go down the routes of how many directors and shareholders are on board, whether your business will benefit from being a limited company, sole trader, partnership, or potentially limited liability partnership. There are pros and cons for them all, and pros and cons for efficiently managing your tax position. It is with all these details, along with finding out what you as a business owner really want to achieve, which can enable us as accountants and tax advisors to really help you maximise your take-home pay while minimising those contributions to age and revenue and customs. So it's not exactly client-specific that I can give an answer to, but it's a case of giving people a general idea of what we can do in terms of looking at the company as a whole and seeing how we can minimise all of your tax liabilities for the revenue. Hope that can answer the question. Yeah, it tends to be more like a tax strategy rather than saying how can we just minimise this. It's saying right, well we need to get into your company and say right, this is what we do. How do you do what you want to do? What do you want to get out of it? Do you want to retain the money in the company and do you want to reduce corporation tax? Do you want to reduce overall tax liability? Do you want to maximise the amount of money you can take out of the company? There's all manner of stuff that directors and shareholders can add as the aims and means of the company, and it's about getting on board with those strategies and seeing how we can streamline the tax payments to revenue. Thanks very much.